Hello, very warm welcome. You're watching Your Trades. That's a weekly wrap on ET Now. This is Priyanka Uppal along with me, Snehi Shah. Snehi, what a week. But then we should say, all goes what ends well, looks well. The whole week, the kind of moves that we saw on index and on Nifty and sensex, it could have been the longest losing streak if we would have closed in red today. But then what a technical bounce which came. A good pullback, or in fact, that's what we saw, smart recovery led by banks and finance counters. And clearly, we saw, of course, there were sectoral losses which could not make up in this pullback also, like IT space. But then clearly, we did recovered losses in banking and finance sector. This whole week, we saw a lot of action on the economic side also. We saw CPI cooling off. We saw IIP coming at the fastest rate in 4 weeks. In fact, IMF also raised the India's GDP forecast. And of course, let's not forget the first phase of the elections, union election also kicked off from today. But then the whole week, what all did we capture? Let's just quickly take a note of it. The major of the moves we saw, of course, we started the earnings and the large cap earnings came this week. Infosys disappointing the street, but Judge Auto posted a good set of numbers, and now we are eyeing Reliance numbers early next week, and of course HDFC Bank on the weekend. But then a lot of actions from the earnings, of course, couple of positive brokerage notes on sectors. Telecom sector saw a lot of brokerage notes this week, and in fact a lot of positive notes which came on wire and cable, and big upgrades we saw. And standout gainers were clearly auto ancillary, battery counters gained this whole week. So a lot of action this week, in fact.
Well, absolutely. And even when you look at stocks that were buzzers in this entire week's trade, even from the non-earnings pack, just simply on the back of brokerage notes or their quarter 4 updates individually, who had names like Angel One on the back of earnings, that was a beat coming in, and HDFC Life steady numbers. Another pack that was doing very well in this week's trade was the metals pack. That sector did very well as well. Ended the week in the red, but nonetheless with losses lesser than its peers when it comes to other sectors. Then you had Manappuram and Muthoot Finance in focus on the back of their fundraising plans individually. Nestle was another stock that we were keeping a close eye on the back of reports that it mixes extra sugar in baby foods that it sells in developing countries, but not that of developed countries. We have developments on that story too. We'll be bringing you that forward as well. The Indian agencies have written to the Food Council as well. So, well, that's the latest update coming in over there. Mastech was yet another stock that did pretty well, and TARC also locked in upper circuit yesterday. On Thursday's trading session, and stellar moves coming there in terms of their quarter 4 and FY24 operational updates as well. Another stock in focus was Vodafone, because, well, that FPO opened this week as well. Will go on and continue in the next week. 18,000 crore FPO. We'll be taking a look at what the subscription looks like for that FPO. Remember, they've already raised 5,400 crores from anchored investors, so we'll be keeping a close eye on that as well. So, well, largely this is what the entire week looked like. Obviously, two major headlines over the course of the week were elections kicking off and the geopolitical tensions that we've been seeing over the course of the week. Spike in crude coming in, spike in gold coming in. On the flip side, equities have been under pressure in India as well as globally. Let's make sense of the week that went by and the week that we're looking forward to coming ahead. And I'm now being joined on the show by our experts for the day, Rajesh Palvia, Head Technical and Derivative Research at Axis Securities, and Ajay Bagga also joining us, Chairman of Elements Platform and Market Expert. Mr. Bagga, I'm going to come to you first today and help us make sense of this geopolitical pressure that we're seeing. You joined us earlier and you spoke about, your stance on what one should do when the market is behaving with so much volatility we're seeing all across everywhere. Even commodities are unpredictable as of now. What's your stance here? What should our viewers do going ahead into next week? What are you penciling in? What kind of moves are you seeing on benchmarks and otherwise moving ahead?
Yeah, it's a tough time when geopolitical sentiment overtakes the markets. And as we saw early today, when Asia opened, the markets were really selling off. Brent was up, gold was up, US Treasury yields were down. So safe haven buying was happening. Then during the day, it came out that the damage was very contained and no nuclear facility was touched. The IEEA also came out with its own assessment on the ground. that no Iranian nuclear facility was touched. No official word has still come out from Israel or the US, while the Iranians have dismissed the explosion as a minor one, and they have just said toy drones and stuff like that. So markets heaved a sigh of relief, and we saw very strong short covering coming in our markets. But the message remains that the geopolitical risks remain elevated. It is in a place of the earth. See, if it was on some other continent, you would not be that impacted because the oil supply chains are not moving through that. Now, what is happening is that instead of strategic patience, where Iran would attack Israel through its proxies in a very long game, very patient game, it's become strategic deterrence, where both of them are now outvying each other in terms of doing a demonstration effect that this is what I can do to you. And what Israel has today achieved is that Iran sent 300 missiles and drones. We shot down 99%. We sent in one which hit its target. We didn't target the nuclear areas, but what we wanted to achieve, we achieved. And the antiquated air defense of Iran cannot stand in front of Israel. I think that message they have sent. It was symbolic also because it's the Ayatollah's birthday today, 85th birthday of the supreme religious head. A lot of symbolism, a lot of diplomatic maneuvers happening in the background. Netanyahu did not want to upset Biden beyond an price of elasticity. And where both Europe and US have been telling Israel not to escalate this further. So the supply chain issue remains. Two sworn enemies have now attacked each other directly instead of through proxies. That becomes a geopolitical risk. Markets will stay on edge. It is difficult to price in something like this. We saw the pricing in the morning and pricing in the evening. Big difference between that. That just shows you it's very difficult to price an event like this.
All right, it's very difficult to approach, to understand how should one approach to equity markets right now. But thanks very much that you highlighted so many political diplomacy angle also. Stay with us, Mr. Bagga, but we do have Rajesh Palve also to talk about technical and derivative side. Now, Rajesh, if you talk about the levels, what a smart recovery we saw. And if you talk about levels, whenever there's a FI's long and short ratio in a ratio of 32 to 68 band, and generally 68% band, the short side is also considered as a big support, and hence a short covering rally was on the cards, and which we saw also. But then what is it? Is it just a technical bounce? Are we out of the woods, or weak hands have already gone, come out of because of the pre-election rally? How should we approach the markets right now?
So good afternoon, Priyanka. Yeah, market is volatile due to this geopolitical, event is going on. So we have seen, smart recovery from today's low. Almost Nifty approach to its 100-day moving average trajectory, and Bank Nifty also approach to its 100-day moving average trajectory, and both indices have shown, recovery from those levels. In the second half of today's session, yes, there was some short covering action already triggered, as we are comfortably now trading about to 22,100. So till 22,100 is intact on Nifty spot, there could be some more upward momentum we could see towards 21,300 to 21,400 as we are approaching to this April series expiry. So I think for April series expiry, the major call concentration is still placed at 22,400, 22,300 strike. So I think that is the resistance area for the Nifty for this pullback. On the downside, yes, in this pullback, there is aggressive put writing has been witnessed for 22,000 strike. So that may act as a good support area for next couple of trading session or towards April series expiry. So I think 22,000 to 22,300 could be the possible range where we can see market to trade for some more couple of trading session. And for Bank Nifty, on the lower side, 47,000 has attracted major put concentration, so that may act as a good support area for a near-term perspective. Till 47,000 is intact. There is a high possibility that Bank Nifty may also move further higher from current level, and possible upside range for Bank Nifty we could see towards 47,800 to 48,000. A major supply zone is placed at 48,000 for the Bank Nifty.
All right, well, Rajesh, thanks so much for sharing those levels with us. Mr. Baga, let me come back to you. Let's get a little sector specific and talk about earnings that are lined up for next week. We have some major banking and financial names that will be coming out with numbers, the likes of HDFC Bank, Axis Bank, IndusInd Bank. You have the Bajaj twins also coming out with their numbers next week, Bajaj Finance and FinServ. So what are you penciling in when it comes to this entire financial space, and how must one play this entire financial basket now on the back of results and otherwise moving ahead?
Yeah, it is a sector which has underperformed, and the issue remains that credit has expanded well, NPAs are well in control, so the top line is growing very well, but the NIMs are compressing because they've had to increase the cost of funding to increase their deposit base and bring in more deposits. Given that credit is ahead of the deposit accrual. So that remains an issue. So expect lower NIMs, but better results in terms of growth in lending volumes and NPAs being contained. That's the factor that the market is going with. Low expectations, so that's good. Most of the sell-off is done with, and from here on, we could see a rally on the banking and the financial sector, and especially with the July budget. I think that will be a good catalyst. So around June, I'm expecting that you could see banks starting to rally for the year quite strongly. So overall, the sector looks quite attractive. Results could be muted given the increase in the cost of funding, but the top lines are growing with the growth in the credit.
Just to thread to this question, only what Snehi asked you, Mr. Bagga, understanding more on the front of earnings. Since you spoke about banks, but then how should we approach the other sectors? The kind of economic indicators we saw in this month for the March IIP numbers, the fastest rate in 4 months. Should we look at good set of numbers from domestic facing sectors also? Understanding Reliance is also about to report, will report numbers early coming week. What are the other sectors that you're eyeing on? And we must wanted to compliment you. The view you had before TCS numbers on IT, the contraband, must congratulate you on that also.
Oh, thank you. Thanks very much. I think the capital goods will continue to do well. Cement is facing a pricing issue, and a lot of new capacity continuously coming in. But the infrastructure, capital goods, heavy engineering, those sectors should do well, and the domestic cyclicals. So, this is not the time for the global cyclicals. Those are still, meandering. But domestic cyclicals should continue to do well. FMCG will probably take off more as the monsoon sets in, and with the June IMD estimate, I think that will give a good leg to FMCG because rural demand will be very critical for that. So I think FMCG one more quarter, and then we could see it getting some traction.
All right, well, thanks so much for your view, Mr. Baga, coming in over there. Gentlemen, stay on with us. We'll continue this discussion going ahead on the other side of this break. But for now, we'll slip into a very short break on this edition of Your Trades. Hi there, welcome back. You're still watching Your Trades on ET Now. Thanks so much for staying tuned. Let's keep the discussion going then with our experts. And Rajesh, now I'm going to come to you. Let's talk about a little bit of, action that we've been seeing on the political front. Now, India has headed to polls. We've kickstarted the first phase of elections as well. Tell us, what impact are you penciling in of this election on the markets going ahead? Do you somewhere believe that this is going to be some sort of a non-event and the outcome is already largely penciled in by the street and that's already factored in? Or are you expecting some kind of volatility or some spike up or spike down coming in on the back of these elections?
So if we analyze from the election outcome perspective, till now market is quite confident about the outcome of this election, and that's why we are not seeing any kind of spike in terms of VIX. VIX are still trading in very comfort zone. That clearly shows there is a certainty towards this outcome of this election. But yes, definitely, maybe we can see some volatility in the market, but majorly it will be from the global front or from the geopolitical front that could give some volatility in the market ahead of this outcome of election. But going forward, we believe that once this outcome comes in coming months, again market may continue its upward trajectory as broader market is clearly showing that it's very well placed above their breakout levels, and one should adopt only the buy on dips strategy. If you get any kind of volatility, it should be used as a buying opportunity in the market, as broader market is holding the ground on the bullish front, and we believe that this momentum can continue further in the coming months also.
Okay. Mr. Baga, one more question to you. In fact, the kind of wave of risk aversion which we have seen over globally over the markets, and even on other indicators like dollar yield surged, all safe haven increased, and in fact equities were the ones which were getting sold on to. Currencies also reacted. Now is crude showing a sign of fatigue? How should one approach to dollar index or crude or gold from here?
Yeah, overall demand is still below the supply, but what is the issue? The issue is the supply chain running through the Persian Gulf, and especially the Strait of Hormuz, which Iran can control very easily.
All right, I believe we have snapped that connection. We'll bring you Mr. Baga right back. And I believe he's back with us. Mr. Baga, continue with your view. Help us understand how to approach these asset classes.
It's a bit weak today. If on a normal basis, we would be quite okay with oil. If you look at how much the OPEC Plus is not producing per day, which is your excess capacity, that is 2.2 million barrels. Another 17 million barrels are going through the Strait of Hormuz on a daily basis. So that is the risk, that risk premium which is embedded in oil. Otherwise, you wouldn't have seen such a sharp spike in oil. Today, IMF also mentioned that the Saudi budget balances at $100. So the producers would definitely like to constrain the supply. But overall, the shale production helps to balance out. And we saw last week the oil correction happened basically because the US commercial crude inventories went up much more than what was expected. So the shale producers are the balancing factor, which helps out keeping the oil markets well supplied. But the issue is supply chains with Iran sitting on top of that supply chain.
All right, Mr. Baga, thanks for that view coming in. Very helpful views coming in on that front as well. Rajesh, let me come back to you. And I believe you have picked out a few stocks to help overcome or help navigate this volatility that we are seeing. So help our viewers understand where you're seeing value amid a market like this.
Yeah, definitely. So three stock ideas which we are focusing at this moment for coming week. First one is from automobile space, that is Escort. If we analyze the weekly time frame, stock managed to give breakout of almost 10-week consolidation range. The way stock is holding the ground above its near-term moving averages, the short covering action was there in today's session also. So we expect that escorts can continue furthermore upside in the coming week, and possible target we could see towards 3200 for near-term trading perspective. One can buy escort with stop loss of 3045. The second stock that we like is Raymond. Stock managed to give breakout of its multiple supply zone. Stock is comfortably holding above all its near-term, short-term moving average. The way stock has shown, breakout on the daily time frame with the volume action, that clearly shows this stock can exhibit good amount of rally in coming days. Possible upside target we could see towards 2080 to 2100. One can buy with stop loss of 1970. And the third stock is Trent. Stock managed to view breakout of last 8-week consolidation, and the way stock is holding the ground at almost its all-time high trajectory, we expect Trent may exhibit a good amount of rally towards the expiry for this month, and I think we can see target towards 4300 for Trent. One can buy this stock with stop loss of 4100.
Those are the topics coming in from Rajesh. Thanks very much, Rajesh and Mr. Bagga, for giving your time and sharing these views with our viewers. Thanks very much. Time now for some interesting opinion coming in from Market Big Voice, Samir Arora. Sounding optimistic on the financial sector, he explains the rationale behind his bullish stance. Let's hear him out.
The next mutual fund that is being considered in India that we might do will actually be related to financial sector, because we think that this sector has, in a big picture sense, done very well all our life, which means more or less all the life of the market since 90s. And it has not done well, at least in aggregate, for the last 2-3 years, while the numbers have been good. And it is where there is a lot of breadth of choices, from mutual funds to brokerage to wealth management companies to banks to private banks to state-owned banks to whatever, credit card companies. It covers a large part of the market, and it has somewhat, not a lot, but somewhat out of favor. And so we think that is a worthy thing to do as a fund. So that means we are very bullish on it as a complete theme.
All right, that's the word coming in from market expert Samir Arora. But let's keep it with interesting opinions coming in. Let's hear out views from DSP Mutual Fund's Vineet Samre. He believes that the near-term outlook on Indian equities looks challenging. Let's understand why he says so. Listen in.
The long-term outlook for us remains positive, and generally as fund managers we tend to remain biased towards equity, so I think that is what drives our long-term view. But I think the near term clearly is looking a bit more challenging, and let me just lay out few of our thought process, how we are thinking about the near term. So I think clearly we have come out with a very strong growth phase over the last 2 years or 3 years in terms of the earnings momentum, and we saw that this earnings were really driven by, in the first phase was top line driven post the pandemic, and then in the second phase the margins expansion actually story worked in favor of driving the earnings. But what we are seeing now is the top line seems to be moderating across the board, across most categories, except let's say the industrials, engineering, some of those tend to do well. But excluding that, we are seeing that the top line is moderating, and now most of the earnings benefit which came because of the commodity cooling off, those I think are also going to get challenged over the next 1 or 2 quarters.
All right, that's all in this weekly edition of Your Trades. The whole week we saw opportunities for both bears and bulls, but then let's see how geopolitical developments shape up over the weekend. Thanks very much for watching.
If you like this video, then like, share and subscribe to ET Now.